Joining us now, Zacks Investment Management Chief Market Strategist Brian Mulberry. Zacks has an asset under management of $25.6 billion. Okay, Nvidia or Walmart?
Our pick right now is Walmart. And the reason being, a lot of the energy in Nvidia is already priced into where it is, the market cap of over $5 trillion. When you look at what their revenue growth has been over the last 3 years, it's 10x. It's a really big number, but the stock price already reflects that. So the question becomes, where do you grow from here? In our view, Walmart just simply has more horsepower, if you will, when it comes to that upside. This is a very large balance sheet in and of itself. They got $180 billion that come in revenue roughly every 90 days. How do you grow that by double digits? Well, the answer is they are. They've invested heavily in AI tools, and they are making gains in e-commerce that allow them to directly compete with Amazon. So you're seeing a rate of growth from a large company that you didn't expect before. But that's why we would pick Walmart over Nvidia right now.
Well, sure. You've got Nvidia at $5+ trillion market cap. Walmart's at $1 trillion. Are you saying that it's harder to move the needle, even if Nvidia comes in with a 79% bump year over year in revenues? I mean, incredible sales.
Yeah.
That is a very hard needle to move for that large a company.
It is, and mainly because a lot of those expectations are already built into where the stock trades today. It has to be not just 79% earnings growth, it has to be even more than that to capture more upside to move the stock. Now, Nvidia is making gains. They're investing in separate businesses. We all know that they are the core of what AI runs on in terms of GPUs, but they are also adding to their own data center build out in terms of having their cloud compute business and also a software business. If those can grow at a much faster rate, you might get a little extra juice out of the earnings call today.
One thing that surprised me, and we just brought it up, Red Robin has done an incredible job, and it's gotten a big move in the stock, 50% just quarter to date. People aren't thinking of food restaurant chains. They're thinking, oh, ARM and Intel and chips, different kind of chips. And so do you recommend that people go more to a retail side? And if so, where?
Well, I think kind of the trend that we saw from Home Depot yesterday to the TJX earnings that we saw today, even Target doing better than expected, the long-rumored demise of the U.S. consumer has been overstated, right? They're spending money. Retail sales over $650 billion last month. That's up 5% year over year. So what you're finding is there's durable spending out there. If you
even with very high gasoline prices.
Absolutely. And now, obviously, if they stay this high all the way through the end of the year, it might change the demand structure a little bit. But if you want to reshape your portfolio and de-risk a little bit, these are some of the places where you can actually latch on to a very strong consumer spending backdrop.
Right. So your other picks are Home Depot, TJX. You're disliking Target, Lowe's. But before we hear that closing bell, because we're just over a minute away from it, can you give me your sense of where you feel the market is going to correct? And I know nobody has a crystal ball, but you and your boss always say trees don't grow to the sky.
That's right. A Mitch Zacks-ism. What I would really be worried about, what keeps me up at night, is we know that the sole driver of this market going forward is all of the capex that's being invested in AI infrastructure. If you have to build 100 data centers, it's a lot of money, but that trickles down into all of these other jobs. We're seeing it in Caterpillar, John Deere, all of these other earnings. It's a lot of money, and that's real revenue. But if for some reason we don't need that many data centers, if that money doesn't get spent, then again, you could see there's collateral damage in these AI adjacent sectors that have done so well recently.
AI adjacent. All right.